a huge interest in trying to look into the transition and find attractive investment opportunity. Therefore, usually in 3 to 4 buckets. Bucket number 1 would be technology enablers for the transition. It could be offshore wind turbines, electrolyzers. So that's a very, very important element because technology will be fundamental to get there. The second bucket is probably around enablers. Enablers for the transition. A good example would be Persephone, the software to map the carbon, but also system as a service providers. These enablers will be critical. It's not only the technology, but the enabling tools you put in place. A third bucket, which has a lot of interest, is probably new asset classes. And what falls into that is, for example, natural-based solutions, so offsets, that is starting to develop as a very major category that is fast growing, and there is keen interest into that. The fourth one I would mention is probably legacy companies that are transforming extremely fast. I think we should never forget that legacy players in hard-to-abate sectors are sometimes transforming really at pace, and they can be fantastic investment opportunity if they can dominate their industry by making the fast transition. So this is what we are seeing. I would say the wisest investors try really to look at the fundamentals, and if the technology and where it stands on the experience curve, the regulation around it, but also the customer demand are all aligning. So a good example, for example, is green steel. If you're in Europe at the moment, significant customer demand from the automotive sector into green steel, strong regulatory backup from the EU ETS and what's happening there. And at the same time, the technology coming down the experience curve, that's what creates the fundamental for a market that is very, very attractive. But these are the type of buckets of investment that people are starting to look into, and these are developing very, very fast. What's critical to mention is probably to avoid a herd behavior, because some of the valuations are going through the roof and just following where everybody is going and probably investing in areas that might be overhyped and might not actually help the transition in a meaningful way. So these are the few reflections of what we're seeing in the market.